Good morning, everyone. Thank you for joining in, especially on a Sunday morning. My name is Simran, and I work as a business development and marketing associate at Gulaq. I'll be moderating today's session. We also have with us Mr. Sandeep Tyagi, who is the key speaker for today's webinar. He is the CEO and founder of ST Advisors and Gulaq. A very warm welcome to you, Sandeep.
Thank you very much. It's great to be here at this launch of our product and with the small case team.
Yeah. So, for all the people who have joined us, we will try to make this session worthwhile as we have some really exciting news. This time at Gulaq, Christmas has come a little early and we wanted to gift you something really special. So, we're excited to announce the launch of not just one, not two, but three brand new portfolios. They are the Gulaq Small Cap, Gulaq Midcap, and Gulaq Large Cap. So these portfolios are already live on Smallcase. You can head on to st.smallcase.com to know more about them. And we'll also be sharing an exclusive discount code during this session towards the end, so stay tuned. Today's webinar, we will focus on introducing these new portfolios mainly and giving you insights into the methodology behind them. We would be happy to address any questions that you have towards the end of the session, so feel free to drop in your questions in the live chat box. Now, before we get into that, we wanted to introduce ST and Gulaq for those who might be new to us. So, Sandeep, I would request if you can just share your screen. I hope the screen is visible to everyone. We've already covered the agenda, so we'll talk about ST and Gulaq for a minute. Then we will talk about a little about our existing portfolios and then move on to the new portfolios, followed by the Q&A. I've already introduced you to Sandeep, but to let you know more about him, he has done his BTech from IIT Delhi and MBA from Columbia Business School. He has an experience of more than 30 years in the industry of finance, analytics, and technology. Moving on, we would be talking about ST. ST Advisors was founded back in 2008 when SEBI permitted algo trading in India. Since then, it has become a pioneer of systematic investing and operates globally around 6 countries. We are managing an AUM of over 1,500 crores across all our business units, including the portfolio management service, which basically serves the high net worth individuals. On to the next slide. While PMS mainly caters to the HNIs, we wanted to make the power of algo driven investments accessible to everyone. And that's how Gulaq was born in 2020. So, using the same tech and research that we did in ST, we created model portfolios designed specially for retail investors. From 2022, we have served more than 20,000 clients already and have an impressive track record of 4 plus years. Now, before we go any further, let's quickly go over some important disclaimers because transparency is at the heart of what ST does. As a SEBI registered investment advisor, we want to remind you that investments in securities are subject to market risks. We advise all investors to read the documents carefully before investing. The securities that have been mentioned in today's presentation are for illustration only and shall not be treated as any kind of investment recommendation. You can see our SEBI registration number and address on your screens for reference. Now, without making you all further wait, I would pass the floor to Sandeep to talk about our existing portfolios and also take you through our new portfolios. Over to you, Sandeep.
Thank you, Simran. First of all, very good morning. I'm happy to be here on a Sunday morning. I'm not sure if everybody else is as happy, but I'm excited that you are all interested in investments and securing your financial future by listening to what's going on the platform of Smallcase and what do we have in store for you. आप कमेंट्स में ये भी बता सकते हैं इफ़ यूड लाइक टू मी टू एड्रेस एनी क्वेश्चन इन हिंदी, तो मैं आपको हिंदी में भी एड्रेस कर सकता हूँ और बता सकता हूँ जो भी मैं इसमें कवर करूँगा. सो आई बी ट्राइंग टू ऑसिलेट बिटवीन हिंदी एंड इंग्लिश. आई होप कि आप सब लोगों को हमारी प्रोडक्ट्स जो गुल्लक की प्रोडक्ट्स हैं उसके बारे में पता होगा. वी, एज सिमरन mentioned, have been providing investment model portfolios, investment advice as a registered investment advisor for many years. And the products that we have on the platform are called Gullag Gears. And Gullag Gear actually refers to various level of asset allocation. So just to recap, Gullag Gear 6, which is our most popular product, is an aggressive posture product. It is 100% exposed to the equity markets, which means it carries position in somewhere around 20 or a little bit more number of securities picked out of the top 500 NSE BSE securities. The minimum investment is 24,000 rupees in that. Gullag Gear 5 is 80% equity, 20% debt. Gullag Gear 4 is 60% equity, 40% debt, and Gullag Gear 3 is 40% equity, 60% debt. ये हम बहुत फोकस करते हैं इस बात के ऊपर बिकॉज द फर्स्ट मोस्ट इम्पॉर्टेंट स्टेप इन प्रॉपर इन्वेस्टमेंट is having right asset allocation between debt and equity. Um, Many people prefer to have their debt and equity with different managers, or they may use FD or real estate or gold investments and then only want equity exposure, which is why Gulla Gear 6 is very popular. But if you are working with us as a single product, then you should appropriately adjust your asset allocation. Now, to recap, again, the benchmark and our performance over the period of more than 4 years that we have been working here, the results are very, very impressive. 51.6% annualized return versus the benchmark of Nifty Midcap Multicap, which would have given you a return of 28.5. I must caution you that this is really an exceptional period where the returns have been very high. This is not necessarily expected that this kind of an outperformance sustains over long periods of time. आप सब लोग well educated, hopefully well informed investors हैं. So we have enjoyed a tremendous period of growth in the markets and in these portfolios, and but this is unrealistic type of long-term performance. Year by year data is there on the right hand side. As you can see, every year we have outperformed the index, except this year we are just neck to neck. We are a little bit 1 percentage point behind the benchmark as the markets have been turning. But the cumulative performance is tremendously ahead of the overall market. Now, as Simran mentioned, we are very happy to announce that we are adding, besides the 4 portfolios we have just covered, 3 more new portfolios, which will be focused on different market segments, market cap segments in the stock market. So the large cap small case will be focused on the top 100 companies. Mid cap will be focused on the 101st to 250th company by market cap. And small cap portfolio will be focused on 251st to 500th company by market cap. Each of the portfolios will have exposure to about 15 to 20 stocks at a given time within the universe that it is operating in. It will not focus on any specific sector. It will be diversified, and we will be giving a monthly rebalancing to realign the risk and reward in the markets that we see. Now, why these 3 market cap segments? So, as you would know, we are a quantitative investment company, which means we look at many, many, many different factors before we decide what to invest in. These could be themes like momentum investing, value investing, growth investing. These could be macroeconomic factors like inflation, GDP growth, interest rates, sectors like FMCG, utilities, technology, or they could be fundamental information like what is the cash flow, volatility of the stock, debt ratios. All of that is put into one hopper, and then we combine it together to get the portfolio. So, this methodology broadly is called quant investing because quantitatively you are combining many different pieces of information to get your investment portfolio. There is no portfolio manager, neither Simran nor me sit there and decide कि today आज हम इसमें invest करेंगे या इकोनॉमिक टाइम्स में अच्छा आर्टिकल आया है तो हम किसी और स्टॉक में इन्वेस्ट करेंगे. That's not our method. We constantly look at hundreds of factors, combine them mathematically, and then decide how much weight to give to each stock in our portfolio. Now, within this, each market cap bucket that I'm going to talk about represents something. So the large cap, because it's focused on the top 100 companies, if you look at its performance, it would have been very good performance in these past uh, 10 years. And especially in the last 1 to 3 years, it is almost double of what the benchmark has been able to do. Again, historical performance is not an indicator of future performance. And in this particular period of time, the historical performance has been exceptionally above what normally can be expected. But in the last 1 year, large cap portfolio would have generated 51.5% kind of a return against a benchmark of Nifty 100 of 33%. Now, this assumes that there is costs which we have already taken out, assumes slippage, assumes some depository cost that you may be paying, and 1 lakh rupee of investment that you might have done, which is larger than our Gulaq Gear 6 investments. But still, to give you a comparison of what period and expenses we have put in there, this information is there. Now let's look at the mid cap. When you look at the mid cap, which is 101st to 250th stock, the returns go up a little bit. So last 1 year return would have been 62%, 10-year return would have been about 28%, but the benchmark was also going up. Now, this is an important aspect, and I will give you relative performance across all three in just a second. This is the result, backtested result for mid cap. And for small cap, the returns would have been even higher. 10-year returns would have been 36%. Last 1 year return would have been 90%. And equally, the benchmark would have also done very well, particularly in the last 1 year, but in the last 10 years, maybe not as well as mid cap in some sense. When we put all of this together, this is a pretty dense chart. But if you look at the three blue lines, light blue, medium blue, and dark blue, they represent the large cap, mid cap, and small cap. If you look at the left side, which is the 1 year result, you can see that the large cap delivered 51%, mid cap 62%, and small cap 89%. If you look at the kind of brownish shades, light brown, medium brown, and dark brown, they are the respective benchmarks. So the gap between the blue and the brown lines represent how much alpha we were able to produce over the benchmark, and the relative size of the bars represent that as you go from large to medium to small cap, the return expectation goes up, and the historical performance also indicates that the return has been going up. Except, very interestingly, over this 10-year period, small cap, mid caps have actually done very well, which is also showing up in very high PE multiples that mid cap companies have had, and some of the correction that has happened in the recent times has been trying to fix that in the marketplace. This is the same data presented along with the risk information. So if you look at the x-axis, which means if you look at horizontally, the blue dots represent how much return do you get. So, as I said, about 17.5% is the annualized, sorry, this is the risk. So the risk goes up as you go from large, medium to small, and the return expectation also goes up as you go from large, medium, and small. So the most important thing to understand is if you want to get exposure to the small growth companies, you are taking more risk in the market. Your expected return is also high, but there will be more volatility. Some time period, some years, the return will be not as good, will be lower than large cap. Other years, and hopefully most of the years, it will be much more. But in aggregate, you should expect higher return and higher risk for small cap, then mid cap, and then large caps are the most stable of the three market segments. This is also indicated more or less in the benchmark data that's below that in the brown shades. Now, this is where we show you what is the maximum amount of loss that has happened in a 12-month period. So, in our blue shade, again, same large cap, mid cap, small cap, 15.9% down, 26% down, or 24.7% down. And the brown shade colors show what happened with the benchmark index. Again, the higher the risk, the more the chances that you may lose capital by investing in that segment as well. And historical data does show that there have been periods when it goes down. But in aggregate, I showed you the result. These make sense in terms of return. Now, what is the information ratio? This is an indication of how much extra return are you getting for the amount of risk you are taking. So large cap, there is relatively less, even though the risk overall is lower, but the alpha, the ability to produce good returns is also less. So the information ratio is only about 0.57. Whereas in small cap, whereas the risk is higher, but the ability to produce outperformance by doing good analysis, good portfolio construction is much higher. So the information ratio is 1.3. This measure is used by portfolio managers to indicate how much value can we add by our investment process. So that's an indication of this quantitative methodology and the backtest that we have completed. Now, one question we always get is how would these uh, uh, portfolios would have done in different bear market phases when the returns were not good. So we picked three periods of 15 months, 40 months, actually, two of them are at 15 months, in which the returns from the index were zero. And these are in 2012 to 2014, 17 to 21, and then 21 to 23. In our portfolio during this period, we had still good positive returns, 9.6 in the first period, very, very good returns in the second period, and 13, this might be a typo, I think it's 13.5 percent return in the second period and 9.6 in the third period. Similarly, in mid-cap, there have been three periods and there have been significant outperformance in 12 to 14. There was underperformance in the second period and significant outperformance in the third period. In large cap, we have been consistent, little bit of outperformance in every period is what we have been able to achieve. So the core message is even when the market is down, we cannot guarantee that you will not lose money because that's stock market investments for you. But we do see an ability to do a little bit better than what the index has been able to do in this period based on the models that we have tested and built. Now, this is probably the exciting part in terms of the discount code that we are making available to people who are attending. As we are announcing these products, they are available on Smallcase platform already. And we are happy for you to join our portfolio and our investor family of 20,000 people or more, and look forward to answering your questions.
Thank you, Sandeep. So, we do have a lot of questions pouring in already. We can address these one by one. So, the first question is by Yashasvi. She says that 20 stocks in small case is a little too many, and she has already subscribed to the portfolio.
Um, so look, the more the number of stocks has the benefit of giving you diversification. Now, in cap, if you're talking about a general small case like Gulaq Gear 6, we are picking stocks out of 500 top stocks on NSE and BSE. सो 500 में से हम 20 स्टॉक आपको सेलेक्ट करके दे रहे हैं. We don't think that is too much. Obviously, if you pick the single best performing stock in every month, you would see that it would do very, very well for you. But the risk of that kind of investment is very high. So हम लोग ये एडवाइज नहीं करते हैं कि आप लोग बहुत ज़्यादा कॉन्सेंट्रेटेड बेट्स लें. हमारे हिसाब से जो लार्ज पोर्टफोलियो हम रन करते हैं, अब जैसे हमारे पीएमएस सर्विस है, उसमें हम लगभग 70 स्टॉक्स में 50 to 70 स्टॉक्स में पोजीशन लेते हैं. पर क्योंकि यहाँ पे रिटेल इन्वेस्टर्स को अपने आप एग्जीक्यूट करना पड़ता है, और अगर आप सिप इन्वेस्टमेंट कर रहे हैं तो और भी कंस्ट्रेंट हो सकते हैं, तो हम उसको कम कर देते हैं, सिर्फ 20 स्टॉक्स ही देते हैं, क्योंकि अमाउंट ऑफ इन्वेस्टमेंट इज नॉट दैट हाई. पर उससे भी ज़्यादा कम करना एडवाइजेबल नहीं है हमारे हिसाब से.
All right. So, Sandeep, the next question is by Dhruv. Gear 6 is underperforming badly. Too many unnecessary changes.
Gear 6 is underperforming in the recent few months. This is normal part of any model methodology. It goes through some periods of outperformance, some periods of underperformance. Nobody is able to build a method where we can outperform in every single period. The changes that you are mentioning probably pertain to number of stocks. I think we had worked and learned from the feedback of various people that execution capability, slippage, ability to rebalance, they wanted us to reduce the number of stocks, which we did. And then we learned about some other constraints where the number of stocks needed to apply for SIP was constrained on the platform to a certain number. So we had to adjust it one more time, which is unfortunate. If we had understood and done that right up front, then one step of change would have been avoided. But as we learn the constraints and work with the technology that is available in the best possible way to serve the needs of all the different investors, we make adjustments.
Right. And since we have a limited time, I would request the audience to try to focus the questions mainly around the new portfolios today. I believe if you have any questions about our gear-based portfolios, you can head on to the YouTube page of Gulaq, wherein we do these monthly AMA webinars where we answer your questions, give rebalance update, and even talk about the past performances of our gear portfolios. Moving on to the next question, it's by Ujwal. What factors influence the selection of stocks within each market cap segment?
It's the same methodology. As I mentioned, overall, we keep building factors. At this time, the library of factors, जो हमारे पास research है, that's over 700 factors that we look at. A factor could be what is the impact of interest rate on this company. It could be what sector it is and how the sector has been performing. It could be what's the cash flow ratio to their debt. It could be what's the volatility of the stock, could be their option ratio pricing. Any of these things could be a factor, and we have over 700. We combine all of these and give weight according to how these factors have been performing, how they have performed in different market environments, and what kind of a market environment we are in. This is the core of the methodology. and we apply it only to the universe of large cap, mid cap and small cap. तो जब हम उसको उसी यूनिवर्स पे लगाते हैं 100 या 150 या 250 स्टॉक्स के ऊपर, then we get the portfolio for that market cap segment. But the underlying methodology is exactly the same.
Got it. Uh, Tajid is asking, will you check the market cap every month during rebalance? Because there could be companies that could move between the market caps over a month due to price rise or fall.
Yes. So we will be following the market cap characterization as according to the benchmark, and the universe gets adjusted at every rebalance period.
Meghna is asking, how does Gulaq ensure the portfolios are resilient during market downturns?
So I showed you the data कि market downturn में हमारा historical performance क्या हम देख रहे हैं. So it seems like that in the market downturns, we are able to sustain the edge and out performance. That doesn't mean maybe when the market sometimes are doing well, we may be underperforming. ऐसा भी हो सकता है. पर ऐसा कुछ स्पेसिफिक कोरिलेशन हमें नहीं दिखाई देता कि जब मार्केट्स आर नॉट डूइंग वेल देन ऑल ड्यूरिंग दैट पीरियड वी विल सिग्निफिकेंटली अंडर परफॉर्म. ऐसा तो हम नहीं देखते हैं. अगर ऐसा होता देन वी कैन सिंपली एडजस्ट. सी कोई भी चीज़ जो नेगेटिव है उसमें अगर आप -1 लगा दें तो वो पॉजिटिव बन जाती है. तो अगर बिल्कुल क्लियर कोई सिग्नल आने लगेगा मार्केट में कि जो हम कर रहे हैं उससे हमें लॉस ही होता है, तो उसको फिक्स करना बहुत ही आसान होता है. पर ऐसा हम नहीं देखते हैं. इसलिए वी ट्राई टू कीप रिसर्चिंग मेकिंग इट बेटर, एंड देर विल बी सम पीरियड्स जहाँ पे अंडर परफॉर्मेंस होगी, पर वो ऐसे पीरियड्स नहीं होंगे जहाँ मार्केट ही अंडर परफॉर्म कर रहा है. दैट्स नॉट नेसेसरी.
The next question is by Rachit. Instead of talking about past performance, let's talk about your forecasting model.
देखिए, फोरकास्टिंग मॉडल और पास्ट परफॉर्मेंस में ज़्यादा फर्क नहीं होता है, क्योंकि हमारे पास जो हिस्टोरिकल इंफॉर्मेशन है उसी के बेसिस पे हम मॉडल्स बनाते हैं और डिसाइड करते हैं. So the best estimate of how things will perform are based on how things have performed. Now, only caveat to that is we adjust for the environment. So macro environment में जो हो रहा है, जो recent performance है, उसके हिसाब से we score and differentiate कि कौन सा stock portfolio, कौन सा securities will do better. वो बेटर सिक्योरिटीज और पोर्टफोलियोज अगले महीने 1% रिटर्न देंगी कि 4% रिटर्न देंगी, ये हमारे पास ज़्यादा एबिलिटी नहीं होती है बताने की. और वो एबिलिटी इस बात पे डिपेंड करती है कि बिटवीन नाउ एंड एंड ऑफ नेक्स्ट मंथ क्या न्यूज़ मार्केट में आती है, इन्वेस्टर सेंटिमेंट क्या बनता है. अगर बहुत सारे इन्वेस्टर्स bullish होंगे and the stock market will go up a lot because overall the news is positive, the information coming into the market is positive, then that portfolio does very well. However, if the overall market and news sentiment turns negative, there is some information on a war or other things that can impact investor sentiment, then the performance comes below. So we do not provide any specific guidance on exactly what we expect in next 1 month. We give you the average performance of backtest and our expectation on what you may expect over longer periods of time. और इन्वेस्टर माइंडसेट इन चीज़ के लिए बहुत ज़रूरी है. अगर आप हर महीने ये ऑप्टिमाइज करने की कोशिश करेंगे कि ये मेथडोलॉजी इस्तेमाल करूं या ये सेक्टर इस्तेमाल करूं या ये फंड इस्तेमाल करूं, तो ज़्यादा चांस है कि आप अच्छी इन्वेस्टमेंट्स नहीं कर पाएंगे. हम एक एग्जाम्पल देते हैं, मैंने अपनी किताब में भी इसके बारे में लिखा है, रिटन अ बुक, कि एक फंड है मैजेलन फंड, बहुत मशहूर फंड था, जिसमें पीटर लिंच ने कई सालों तक चलाया, एंड दैट फंड हैड अ रिटर्न ऑफ ओवर 25% ओवर इट्स लाइफ per year. But more than half the investors who invested in the fund lost money. They did not make 25%, they lost money. और उसकी वजह सिर्फ यही थी कि जब फंड बहुत अच्छा करता था तो बहुत सारे लोग उसके अंदर आ जाते थे, और जब फंड थोड़ा सा अच्छा नहीं करता था, जो कि नॉर्मल है, अप एंड डाउन आते हैं, तो बहुत सारे लोग छोड़ के बेच के चले जाते थे. तो लोग पीक पे आते हैं और बॉटम में चले जाते हैं. तो आधे से ज्यादा लॉस लोगों का लॉस हो जाता है, हालांकि फंड ओवरऑल जो लोग उसमें रहेंगे वो 25% रिटर्न दे रहा है। तो इस तरह से दीज टाइप्स ऑफ क्वेश्चन विच आर वेरी फोकस्ड ऑन शॉर्ट टर्म फोरकास्टिंग I avoid, and I recommend that investors who are trying to build a long term investment habit also avoid.
Yeah. So talking about that, yes, everyone, Sandeep has written a book recently called The Little Book of Big Gains. It's available on Amazon and it's a very good read, especially for early investors like me. So you guys can go and check that out as well. The next question is by Sanchit. Who are these portfolios best suited for? New investors, it's experienced investors, or both?
I would say these are better for experienced investors. As I showed you, the risk and return characteristics are different in the three portfolios. So you should, if you are a new investor and just want to invest in a broad market, stock market, then the Gulaq gears are the right portfolios for you. If you feel for based on your ability to understand the market, your desire to either take more or less risk in the market in expectation of more or less returns, then these sector specific, market cap, segment specific portfolios are better for you. सो जैसे कि अगर आपको लगता है कि मैं थोड़ी सी छोटी कंपनियों में, स्मॉल कैप में इन्वेस्ट करूं ताकि मुझे ज़्यादा रिटर्न मिले, एंड आई एम ओके टेकिंग मोर रिस्क बिकॉज आई एम एन एक्सपीरियंस इन्वेस्टर, तब आपके लिए ये पोर्टफोलियोज ठीक रहेंगे। पर फॉर अ न्यू इन्वेस्टर जो ये कॉल्स नहीं लेना चाहते या नहीं पूरी तरह समझते कि आगे क्या होने वाला है, तो या उनकी पेशेंस या रिस्क टॉलरेंस की मार्केट में जब डाउनटर्न आता है तो कैसे हैंडल करना है, वो अभी डेवलप नहीं हुई है, देन यू आर बेटर ऑफ डूइंग अ ब्रॉड बेस्ड इन्वेस्टमेंट।
Got it. Next question is by Rachit. What makes your new small case different than other quant small cases based on market cap strategies?
सो आपने सवाल में ही ये कहा है कि क्वांट स्मॉल के स्ट्रेटजी, सो दैट मीन्स इट ओवरऑल अप्रोच इज सिमिलर, पर विद इन क्वांट मेथडोलॉजीज कैन बी डिफरेंट। हमने बहुत सारे वीडियोस बनाए हैं और क्वेश्चंस भी आंसर किए हैं इसके ऊपर कि हमारी क्वांट मेथडोलॉजी क्या है। जैसे कि मैं आपको बता रहा था कि आर रिसर्च इज नाउ स्पैनिंग ओवर 700 फैक्टर्स दैट वी आर बिल्डिंग। We do focus on portfolio construction. It's not a single stock selection methodology. We don't simply say ये stock सबसे अच्छा है, ये stock उससे कम है, ये उस. That's not how we look at it. We put together a portfolio of stocks which we believe together can combine the risks of various things. देखिए फाइनेंस में एक ही फ्री लंच मिलता है, वो ये कि जब आप कुछ चीज़ों को इकट्ठे खरीदते हैं, तो अगर एक चीज ऊपर जाती है और दूसरी चीज नीचे जाती है, तो उन दोनों का इफेक्ट थोड़ा सा न्यूट्रलाइज हो जाता है। इसको बोलते हैं कोरिलेशन। जब आपकी कोरिलेशन थोड़ी सी एक से कम होती है, तो आप एक ऐसा पोर्टफोलियो बना सकते हैं जिससे आपके रिटर्न और रिस्क बेटर हो सके। तो हमारी मेथडोलॉजी में बहुत सारी तरह से मार्केट को देखना, 700 फैक्टर्स को देखना, उसको मैथमेटिकली कंबाइन सिस्टमैटिकली करना, हमारा कोई फंडामेंटल ओवरले नहीं होता है। कई सारी मैनेजर्स ऐसे हैं जो कहते हैं कि हम हाँ क्वांटिटेटिव मेथड करते हैं, पर हम उसके ऊपर अपनी सोच भी लगाते हैं। हम कोई फंडामेंटल ओवरले नहीं लगाते हैं, हम सिर्फ हिस्टोरिकल मैथमेटिकल मॉडलिंग के हिसाब से ही इन्वेस्टमेंट करते हैं। और तीसरी बात फर्क ये है कि हम जब पोर्टफोलियो कंस्ट्रक्शन करते हैं तो हम पूरे पोर्टफोलियो को एज ए यूनिट देखते हैं। हम कभी भी ये नहीं देखते कि सिर्फ ये स्टॉक बेटर करेगा या नहीं करेगा, क्योंकि उसमें प्रिडिक्शनबिलिटी कम रहती है। तो दीज आर द डिफरेंसेस बिटवीन आर क्वांट अप्रोच for small case. Of course, small case is different than broader, and quant is different than fundamental investors.
Hope that answers your question, Rachit. The next question is by Yashasvi. How small cap portfolio is different from Gullag Gear 6?
So Gulaq Gear 6 looks at all the top 500 stocks. Small cap looks only at the lower market cap of 250 to 500. So bottom half of the market cap stocks in the BSE 500 or NSE 500 universe.
The next question is about again the new portfolios by RV. What is the minimum investment? And I think it would be good if we can also share the optimum investment amount in these portfolios.
The optimal investment amount is, I think, mentioned somewhere. I don't have it top of my mind. I think it's about 1 lakh per segment. And the idea for that is really to, be able to build a good diversified portfolio and also not necessarily target it to the smallest investors. As I said, this is meant for people who are a little bit more experienced and want to develop their portfolio selection from broader diversified portfolios to specific segments.
The next question is by Preetham. What is the theme of this portfolio? Value, value plus growth, growth or momentum?
Those are themes, momentum, value. Uh, So these are based on not on value or momentum or those kinds of themes. These portfolios are simply based on the market cap segment. So we are a multi-factor quant model, which means as I have, I think, described several times in this call as well, over 700 factors across themes, market cap, segments, sectors, macroeconomic conditions. All of these together is what we put into the model. So it's not a single theme like momentum, value, or quality.
All right. The next question is by Deepak. Which is better in your small case? First option, put lump sum and wait for a few years, or the second option, which is to start with SIP.
So investment is to be done overall as soon as it's available. बट हमारी प्रोडक्ट इज नॉट द ओनली प्रोडक्ट सो अगर आपने म्यूचुअल फंड्स बैंक अकाउंट्स एंड हमारी प्रोडक्ट में इन्वेस्टमेंट किया है और आप हमके समझ रहे हैं then it's okay. Yeah, you should do some investment, increase it if you like it, keep building it in a SIP kind of a process. पर आप ऐसा तो नहीं करेंगे that you have the money sitting in a bank in a checking account and then you do SIP over 12 months. That does not seem to produce necessarily good results because the expected return in a checking account is very low, and the expected return in broad diversified equity portfolios is significantly higher. सो आप इन्वेस्टमेंट एसेट एलोकेशन कीजिए पहले. नाउ कौन से मैनेजर को कितना पैसा देना है, कितना बढ़ाना है ओवर टाइम, कि लंप सम किसी के साथ आपको जुड़ जाना है, दैट्स अ डिसीजन based on how confident you are about a particular investment. And there it always makes sense to build up confidence and build up investment, but not in the overall market. Overall market, आपकी asset allocation, you can decide based on your savings, your needs, your goals, and stick to that.
Right. The next question is by SK Chetri. Do we have a mantra as to when should we do lump sums? Just after a rebalance or during corrections or making a mix of the two? I'm looking at an alternative to a fixed state SIP.
Um, पहली बात तो राइट आफ्टर रीबैलेंस और एट द टाइम ऑफ रीबैलेंस इज द बेस्ट टाइम टू डू द इन्वेस्टमेंट, क्योंकि जो भी पीरियड बिटवीन रीबैलेंसेस है उसमें जो भी हमारा सिग्नल था, जो भी हमारी एनालिसिस थी, वो ऑलरेडी डेटेड हो चुकी है. तो आप थोड़ी सी पुरानी इन्फॉर्मेशन के बेसिस पे इन्वेस्टमेंट कर रहे हैं. तो रीबैलेंस डे इज द बेस्ट टाइम टू डू द इन्वेस्टमेंट इन एनी पोर्टफोलियो. Second thing is it better to do lump sum or is it better to do over a period of time? ये हमने अभी एड्रेस किया पिछले क्वेश्चन में. ओवरऑल जो आपकी एसेट एलोकेशन है, आप अगर सिर्फ इंडेक्स फंड भी खरीद लें एक ब्रॉड, तो आप पूरी तरह से उस एसेट में आ गए कि मैंने इक्विटीज में अपना 60% पैसा लगाना था, 60% एलोकेशन टू इक्विटीज. नाउ दैट मनी इज देयर इन अ ब्रॉड इंडेक्स. अब आपको अगर किसी फंड मैनेजर जैसे एसटी या गुल्लक प्रोडक्ट पे भरोसा है, आपको समझ आ रहा है हम क्या कर रहे हैं, आपको पसंद आ रहा है, तो आप ब्रॉड इंडेक्स से हमारे ऊपर धीरे धीरे बढ़ा सकते हैं इन्वेस्टमेंट. बट वो पैसा कैश में रखने, चेकिंग अकाउंट में रखने से आपको फायदा नहीं होएगा।
As we always say, time in the market is always better than timing the market. So the next question is by Jay. I am a new investor, able to do high risk investments. So in which small case of Gulaq should I invest in?
सो जय, पहली बात तो आप दो बातें कह रहे हैं जो इंटरेस्टिंग है। एक, यू आर अ न्यू इन्वेस्टर, एंड सेकंड, यू आर अ
High
ओके विद रिस्क टेकिंग इन्वेस्टर. So congratulations, good. You have the aptitude and the ability to do that. आप, I hope आपने जो आज देखा वीडियो में, you have understood that ability to take risk means you can lose money and lose more money if you take more risk. If that seems something you can handle emotionally, then obviously, and you have the right asset allocation, मतलब आप अपनी एप्टीट्यूड या अपनी कैपेबिलिटी से ज़्यादा रिस्क नहीं ले रहे हैं, तो स्मॉल कैप वुड बी द बेस्ट हाई रिटर्न product portfolio for you. But I'm not recommending that for everyone. I'm recommending only because you're self-identifying yourself as a high risk seeking investor.
Uh, all right. Do we have any more questions from the audience? Please feel free to write in because I think we've covered all for now. Okay, we'll just wait for a couple of more minutes in case anybody wants to ask any more questions. All right, looks like we're done, Sandeep. Thank you so much for your time today.
Thank you. Take care, everyone. Have a good Sunday and happy investing.
Thank you for joining in, everyone. Take care. Bye.